Hey, what's up, everybody? I'm Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage and the Home Foundation, and I have got some great news for you guys this week. If you love the details and want to know how things work, kind of like a clock builder, well, stick around. But if you just want to know what time it is, I'm going to go ahead and give you some pretty short cliff notes. This week, mortgage rates just dropped to their lowest levels in nearly a year after we had a much weaker than expected jobs report. Now, that's great news for home buyers and homeowners, but you'll have to stick around to find out why. Now, if you've been waiting to refinance or you're on the fence about buying, now may finally be the time to at least start really paying attention or looking for that person that you trust to lead you in the right direction. Text me at 618-307-6106, or you can click the link below to apply now, and I would be more than glad to give you a free consultation. Now, we've got some of the best programs for military, law enforcement, and firefighters as well through the Home Foundation, so make sure and keep that in mind, either for yourself or for someone you care about that fits into that category. Now, for my clock builders, first things first, if you made it here, I like you and I want to reward you. So shoot me a text to 618-307-6106 with your first and last name, and I'm going to enter you into a drawing for a $50 gift card. So rates actually started this week moving a little bit higher, which I was not real fond of. And that was due to some really boring technical reasons, the kind of stuff that traders might care about, but most people forget before I even finish this sentence. But by midweek, there was some softer economic data that came in that kind of flipped that trend a little bit. Now, job openings came in lower for July, and that really helped push the rates back down. They actually started touching the 11-month low by Wednesday. Now, Thursday saw even more improvement as a lot of the traders were trying to square up their positions ahead of the big jobs report that actually came out today. Well, today hit, and holy cow, yeah, that's where everything changed. The US economy actually added only 22,000 jobs in August, and that was far below the forecast of 75,000 jobs that was expected. ADP's private payroll showed only 54,000 jobs. Now, unemployment claims have been above 1.9 million for about 15 straight weeks now, and job openings are now at a 10-month low. And that all points to a labor market that's definitely cooling off. So why in the world does that matter to you? Well, job data weakens, or when job data weakens, investors buy bonds. And bond prices, when the demand goes up, so do bond prices. So when bond prices go up, mortgage rates actually go down. It's called an inverse relationship. And that's exactly what happened today. We actually saw the biggest single day drop in 30-year mortgage fixed rates in more than a year. Now, rates are actually back in the same range that we saw in fall of 2024. Now, what about the Fed? Well, the Fed looks at a few things. Two of the main things they're really looking at are inflation and employment data and the fact that it's cooled. Now, employment's weakening, and Fed Chair Jerome Powell has already hinted that a rate cut, a Fed rate cut, is likely coming closer. Now, a cut at their September 17th meeting is definitely looking more and more likely. So just keep in mind that the Fed doesn't directly set mortgage rates. The Fed funds rate and mortgage rates are not the same. The Fed adjusts the Fed funds rate, which is a short-term rate where banks lend money to each other. So mortgage rates actually move with the bond market, and the bond market usually reacts before the Fed even makes their move. So what does this mean for you? Well, for homeowners, lower rates mean purchasing power and smaller payments. So if you were capped out earlier this summer at the house that you were looking for, maybe because of your debt ratio or because you're really responsible and you didn't want your payment to go above a certain amount, it is probably time to rerun your approval. There's definitely going to be more purchasing power, or if you stay at the same price point you were at, you're probably going to have a much more affordable payment. Now, if you're somebody that's been considering refinancing, I always say just because you can does not mean you should. The right strategy beats the right rate any given day. So if you do have a higher interest rate, now might be the time to drop that payment, shorten the term, or maybe even roll in some high interest debt. God knows that credit cards have gone through the roof over the last few years. So if I was to make a decision whether I was buying a home or refinancing a home, if I'm in the process for buying a home, I would probably, from a lock or float consideration standpoint, I would be looking, if I was closing within the next 30 days, I'd be looking somewhat carefully at locking. But with this new data that came out, I would be kind of carefully floating for maybe the next 15 days. Make sure you're working with somebody that understands the market enough that they can help guide you through that. Outside of that, if you're closing much later on in the year, or if you're doing new construction, I would definitely be floating right now, because the likelihood that rates are going to come down is starting to look pretty darn good. So the bottom line is this: mortgage rates are trending lower, and now may finally be the window that we've been waiting for. So text me at 618-307-6106, or you can click the link below to apply, because I got a sneaky feeling that once people realize that rates have dropped where they are, there's going to be a lot of refinances, and we want to get you in line as quickly as we can. So I'm Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage and the Home Foundation, and I'm here to help.